Bisbee, the insight you need. I'm Juju. Federal Reserve Chair Jerome Powell said the Fed will continue to raise interest rates to combat inflation, as Americans are feeling the burden of the fastest price increases in 4 decades. His congressional testimony comes less than a week after the Fed announced the largest interest rate hike since 1994, raising the federal funds rate by 0.75 percentage point at its June meeting. It was the third time the Fed hiked rates this year, bringing the federal funds rate to 1.5% so far. Central bank officials project the federal funds rate could be between 3% and 3.5% by the end of this year. But even as the Fed tries to combat soaring costs, recession fears are also looming. The central bank is facing a challenge: how to ease prices without pushing the country into a recession. During the congressional hearing recently, Montana Democratic Senator Jon Tester asked Powell whether he agrees raising interest rates too much too quickly could drive the U.S. into a recession. Powell responded that it's certainly a possibility. However, later in the hearing, Powell did say he does not see the likelihood of a recession as particularly elevated right now. He claimed that consumers are in good shape, businesses are in good shape, but is that true? According to data from the U.S. Department of Labor, the U.S. Consumer Price Index rose 8.6% year-on-year in May, hitting a record 40-year high. Consumer confidence also hit a 60-month low last month. Figures from the U.S. Commerce Department show the final U.S. gross domestic product, or GDP, fell 1.6% in the first quarter. The Atlanta Fed predicts that, dragged down by this, in the second quarter of this year, the U.S. GDP growth rate will be negative 1.9%. According to economists surveyed by the Wall Street Journal, there is a 44% chance of a recession over the next 12 months. Goldman Sachs predicts that the probability of a recession in the next 2 years is as high as 48%. Morgan Stanley even said the Fed's tightening policy has doubled the chance of a recession. Meanwhile, when it comes to some of the greatest burdens Americans are facing, rising gas and food prices, Powell acknowledged that the Fed's move to raise interest rates will not help bring those costs down. These high prices remain a function of the Russia-Ukraine conflict and COVID-19 related distortions. In a departure from historical norms, the Fed is embarking on a rate hike cycle as the economy heads into a soft patch. An overly aggressive approach to hiking rates may bring about the worst of both conditions, leaving consumers with the kind of inflation that hurts their disposable income the most, while stunting economic growth.